In this video, I'm going to show you how to quickly find and scan for stocks when trading within the stock market. I'm going to show you everything from how to set up a scanner to which specifications you're going to need, how to use it, and then how to quickly look at the results to determine which positions are worth taking and which are frankly a waste of your time. And all that it is that I ask in return for this video is that you hit that ravishing like button. It is imperative that you hit that ravishing like button because honestly, I can't handle all that ravishingness myself. Okay, so before we get into the video, quick plug, if you'd like to keep up with our nightly watch lists, the easiest way to do that is to join our free ZipTrader Circle Facebook group. The link is in the description. This is a great foundational starting point if you're having a hard time locating stocks. Also, if you're wondering about the frequent change of scenery, it's because I'm moving into a new place. I'm moving from Santa Cruz to the Bay Area, and this process has led to me staying in hotels every few weeks. But soon I'll have a new location for filming videos. Okay, so here is the scanner. I've already set it up, but let's go through each step just so that you understand why it is that I have it set up the way that it is. So for last, this is the price at which I'm going to be setting for the minimum for the scanner. This is what I search for in the morning, and you can make adjustments. Don't just go off of my recommendations, mess around with it a bit. I have this set to last, and I have it set to a minimum of 10, and then a pretty much unlimited range for the higher end. Now, the reason that I have it set to a minimum of 10 is not because I hate penny stocks. In fact, I love penny stocks. I make videos every month on them. But the reason is because when it comes to technical analysis plays, I focus on stocks that are above $5 to $10. Usually, I'll have it set to 10, but sometimes if I'm not seeing anything, I'll have it set to 5. But 10 is probably a better range for me. And the reason is because when it comes to lower cap stocks, I like to have some sort of catalyst, specific catalyst such as an FDA approval or some sort of news event coming out that I know concretely is going to happen first. Otherwise, I'm just sort of gambling, and I don't like to gamble. I like to have specific probabilities in my favor against them. So when it comes to my technical analysis scans, I'm looking for something that's at least $10, and on the higher end, it can go as far as you want. But generally speaking, it's going to be less than 100. But in any case, that's set as it is. Volume, I'm looking for something that's about 10 to 15,000 minimum in daily volume. And the reason is because certain price action can cause an increase in volume. When it comes to price action that's looking pretty beautiful, volume is often going to spike anyway, so it's not a huge issue. When it comes to really low cap penny stocks, you're going to want to make sure you have high volume. But again, for this sort of scan, we're not really looking for that. Now, the RSI is the indicator that tells us whether or not a stock is a good deal. When it's oversold, that means that we're in a good deal range. When it's in the middle, that means it's fair value. Everything below the middle is considered a below fair value position. Everything up here is considered overbought based on the statistics and the algorithm. It considers it overbought. That means it's a little bit high. It's traded a little bit too high. So I like to find stocks that are in a good deal range. So I have this set to 45 and I have the RSI set to the same range that I have here. And so this scans for stocks that are less than 45. 45 should be the middle. It's about a little bit lower than the middle, but in any case, it scans for stocks that are in the lower range below fair value. We like stocks that are below fair value because if we could buy in at the discount, we could simply just ride back up until it's overbought or until it recovers back to fair value. And in some cases, it recovers a lot higher and it gets overbought and it keeps going up and we have more upside. But that doesn't always happen. In any case, this is one elevating factor that we like to look for. And another thing that I like to scan for, and this is a fairly recent addition to my scanning in the morning, is the historical volatility. When it comes to being a trader, the most important thing is having the volatility to trade off of, and also a winning smile. But historical volatility in the stock is very important. I like to see stocks that are moving at least 10% within a recent time span. So you could adjust this, but I have it set to 10% from 15 bars ago. And for the chart, I have it set today. If you're looking for an intraday position, you may set this a little bit more tight. I'd say maybe the 10 minute or the 5 minute. But for these two, you could set it based on the type of position that you're taking. We'll go through more of that later. But in any case, this chart is assuming that you're looking for a longer term swing trade. Okay, so once you have this set up, I also recommend just going ahead and saving it as a scan query. And that way you can just go up to your setup scanner, and every time you want to use the scanner, you could just select that. This is my hashtag RSI scanner. And the other benefit of this is once you do that, you could set up an automatic watch list on the side that automatically scans for this in real time. So that way, when you're actually trading or when you're looking at other positions, if something pops up that meets your criteria, then you can have a go at it with the automatic watch list on the sidebar. Okay, so let's go ahead and scan. Okay, so we have a list of different stocks. How is it that we start? How do I recommend starting? Well, my suggestion is to start from the biggest gainers because we're looking for stocks that are both below fair value, have historical volatility, but also have signs that they're not just a dead dog that has no chance of recovering. We want a sick dog that could once again one day be healthy. So let's go through the list and see which ones are eligible. We could discount these are Fed ones, but let's go through the list. Okay, NUS has a consistently downtrading pattern, but it does have some periods of just massive increases after running down. And we've just seen this massive discount. Let's see if this makes sense to look at. Okay, yeah, so we're trading below our directional SMA line on the 180-day. And the directional SMA line, again, means if we're above, it means we're in an upward direction. And if we're below, it means we're in a downward direction. So this is a stock that's been down trading for quite a while. If we're looking at the year chart, it's way below. Well, is there opportunity? Well, we do have some increasing price strength, and we have a decent amount of upward potential. So would I put this on my watch list? I don't love it. We're already almost near fair value, and we do have price strength, but there's too many deprecating factors. For example, we're down trading overall. We have negative price direction, and we have failed breakouts. I would say not worth it, right? So we could discount this position, and we'll go to the next one. This one looks, we'll do Merck. This isn't good. BMI. Okay, so BMI was one of the ones I showed earlier, but this is a perfect example of what I like to look for. So this is a stock that has a consistent history of providing these beautiful price direction run-ups. I call these directional bubbles, where basically it goes up massively over our directional SMA line and then breaks back down, providing entry points. And this overbuying is a great opportunity for us to take advantage of overselling entry points. Buying in and oversold, and then holding out until overbought is an excellent strategy to employ with a lot of these patterns. And we have the same sort of thing here. So is this a sick dog on the side of the road? Well, look, it was a sick dog. It got oversold. It went from overbought to oversold, and now we're starting to trend up. So this is no longer just a sick dog. Let's see what we're looking at in a closer time span. Okay, so in the last 5 days over the last week, we do have negative price direction. Okay, well, let's look at how we're doing intraday. So intraday, look, we got this beautiful price confirmation. We have a confirmation here. The chart is a little sporadic. This is not a good day trading position, but in any case, we have entry points at confirmation where we could simply just ride the price strength up and then sell out at a validation point. Now, this isn't exactly the most popping stock, but it does have a history of running up. There's not a huge amount of upside, but in any case, this does have a previous pattern of providing the confirmation and the run up that we like. So that, that could have been an eligible position. All right, let's try another random one. Okay, this one is interesting. So this one's interesting. Ran up like an inflamed banshee. Cut back a little bit because every reaction in the stock market is an overreaction. And then it held, kind of went up a little bit, and it really couldn't decide which way it was going, and then it got beat down like a rabid dog. Now, here, right, do we take an entry point here? If you're seeing this intraday, do we take an entry point? Well, no. Because it just looks like a rabid dog. We don't know if it's dead. We don't know if it's dying. We don't know if it's going to recover. We need to have a sign that the stock is going to recover. And then we did see this run up. So let's go ahead and look at the chart for this. We're still on the intraday. Okay, so this is a nice chart, right? So we have it breaking into an upward direction, and we like buying into an upward direction. And then it held direction here, which is an acceptance of a upward direction. And then it continued to go down. And then it attempted to reject the upward direction and accept a downward direction. That didn't happen. We had a confirmation above the price strength SMA line and a increase, and we have a decent amount of price strength here. And then boom, we saw some consolidation, and we saw it accept a downward direction before taking back a little bit of its ground, but it's been fighting in price strength. So do I like this position? Well, if I was looking at this in the night before or in the morning that I'm planning on trading, then I would look at this and say, okay, well, we're below fair value. We're in a good range there, which makes sense since, again, that's what we set for our scanning criteria. And we have some price direction. What I would look for in this stock is say, okay, well, I want it to hold. I want it to hold price direction because when we have an upward direction, we have a huge elevating factor. And when we're below fair value, we have an elevating factor. And when we have price strength, we have an elevating factor. Those are three elevating factors combined with the upward potential to 49.4. So yes, this would be something that I would consider watching. Okay, what if you're looking for a shorter term time span? What if you're looking for something specifically to trade for a couple hours, an intraday day trade? Look for a closer or tighter time span. I would say an hour is good. An hour corresponds to the 20-day 1 hour chart, and that's the abbreviation over here. When it comes to day trading, you may want to emphasize using a tighter time span just because it's going to be slightly more relevant. You can still, of course, use the other scanner. It's just a matter of what pattern you're looking for and how long you're looking to be exposed to the position and what setups you're trying to track. But for this, we'll use the 1 hour just to make it a little bit tighter. And we'll go ahead and click the scan again. Okay, so what stock should we look for? Okay, so again, we're starting with the percentage change. I don't know if I have it set default to just start with the highest percentage gainers. But in any case, I do that because I want stocks that aren't just beaten down, but ones that are actively recovering. So we'll start with, I don't want to do the Fed, we'll do the RRTS. This looks like an interesting chart. RRTS. Boom, boom, boom. Okay, so we have this beautiful price directional bubble, and we have a little mini directional bubble there. Whatever. We see it go up, building price directional strength over our SMA line, and then all of a sudden we see it break into the blue short-term SMA line into a negative price strength trend. Now, it is still holding price direction. Let's see how it's looking intraday. This is an ugly chart. I shouldn't have showed you this position, but anyways, I don't recommend low float stocks like this when you're day trading non-catalyst plays. If you can avoid them, that's always great. Let's try. Yeah, we'll go for MTB. Let's get to there. Okay. Okay, we'll analyze this one. This is a larger cap stock. Okay, so long term, we have a negative price directional bubble. We have some fighting back and forth over our directional SMA line, and then we have a little bubble here. We have a break of both price direction and price strength over our short-term blue SMA line and our directional SMA line. We're oversold, but that's not enough of an elevating factor for us to take a position based on the fact that both of these are both broken. The only thing that I will say is that if we're looking at this, we have previous support. We have previous support from, what is this, 160.52 to 158 or so. So I would look for it holding this. I would look for it holding support. If it breaks past the second previous support and then breaks past the other one, then that's just a dead dog. I would look for it holding. I wouldn't just take a position here because, one, even if it did start going up afterwards, you're not getting in as good of a deal. You're not getting in at as good of a deal, and likely it would probably just keep running down anyways. So you want to be careful with that. If we're day trading this, you use that in context. We're using multiple time frames. You're using that in context. So with this, buy into price direction. And this does have a pattern of running up. And this does have a pattern of providing confirmation points and then allowing you to hold until we see a validation point, which is that break. The less conservative one is the break below the short-term blue SMA line. And the beautiful thing, though, is about this system is that if you buy in at confirmation, you're buying into a period of price strength where you have an elevating factor. It doesn't mean that if you buy into any confirmation, it's going to keep going up. Like this one, it didn't keep going up. It actually went right down afterwards. But the deal is that if you're buying into price strength, that means that you could simply hold, and then you can measure the price strength. It's stronger here than it is here. You could simply hold, and then all of a sudden when you have a validation point, you can cut. And then now you just had your profit from here to here, right? Maybe you got out a little bit lower, maybe you got in a little bit higher, I don't know. But in any case, that's a more conservative system, and this is just an average play. In this situation, you could buy in upon confirmation. It really wasn't a confirmation point because it opened below, but let's say you messed up and you bought in a confirmation. But in any case, let's say you messed up and you bought in here, then you could sell out at the break below the SMA line. So it's, it's one of those things where you could buy in, you maximize your upside while minimizing your downside and kind of giving yourself a concrete entry and exit point. I'd say that half the battle is actually having a plan and executing on it, not just doing whatever feels like it's the right move. The stock market does not care about your feelings, so don't treat it like a therapist. Instead, treat it like a monster that you're trying to tame, and you need to tame it by using confirmation and validation points. And you can adjust that if you find a better system, and there's other elevating factors that you need to employ to find better confirmation and validation points. But those are, two big things. Okay, so let's look at a few more. Ash. Okay, so what else should we look for? Tree, lending tree. Okay, we have a consistent run up in the 180-day. And look, so we see we have these pushbacks from the uptrend, right? Those are ways that we can multiply our gains by also buying into the uptrend, right? So the uptrend intraday is beautiful, but let's go back to the 180-day for context. Okay, so around this time, towards the end of 2018 and the beginning of 2019, it broke its directional strength after having a few bubbles, but it broke its directional strength and ran up, gave back a little bit of its price direction here and there. But overall, this is the interesting part to me, right? This is the part where it was running up, but it started having some pushbacks. And that's healthy. That's a sign of the healthy uptrend. If you have a stock that just goes whoop, that's usually not that healthy. But this is beautiful because it allows us to buy in upon the discount and then sell out upon overhyping. But anyways, folks, I hope this video is helpful. If you have any questions, feel free to reach out to us below or on the ZipTrader Circle Facebook group. The link to that is in the description as well. We also have a Discord chat, a trading tutorials playlist, and a bunch of other resources across the ZipTrader hemisphere to help you grow your skills and develop yourself as a trader. I really appreciate you tuning into these videos, and if you haven't already, make sure to subscribe for more short, sweet, and simplified videos on how to trade the stock market. And if you have any requests for future videos, make sure to leave those in the comment section below as well, because it gives me an idea of what people want, and if a lot of people ask for the same thing, I'll usually make a video on it. Anyways, folks, have a great day, and I'll see you in the next video.